All right, let's get right into it. In this explainer, we're going to unlock the stock market, especially for anyone who's just started earning. If you've ever looked at your bank account and thought, how do I make this money do more? Well, you're in the right place.
So, you've got a job, money's coming in, you're putting some aside. But what's the next step? You hear people talking about investing and the market. And let's be honest, it can sound super complicated, almost like it's some kind of a private club with a secret language. Well, today, we're giving you the all access pass. We're going to break it all down, piece by piece.
First things first, to understand the game, you've got to know the arena where it's played. So, where does all this buying and selling actually happen? Let's talk about what the stock market really is. Okay, here's the formal textbook definition. It sounds a little dense, I know, but just focus on those key phrases: markets and exchanges, and shares of publicly held companies. Really, it's just a big, organized system for trading. But you know what? There's a much easier way to think about it. Now, this makes sense. Just picture a gigantic, bustling marketplace. The only thing that's different is that instead of people selling apples and oranges, they're buying and selling tiny, tiny pieces of companies. So you could own a little sliver of a huge tech company, right? It's a market where ownership is the product. So we know the marketplace, but let's zoom in on the item that everyone's there to trade. What in the world is a stock? And this, right here, is the absolute core of it all. A stock isn't just a number blinking on a screen. It's your proof of ownership. When you buy even one share of a company, you become a part owner. You're what they call a shareholder. Pretty cool, right? This pizza analogy is just perfect. Imagine you own one slice of a pizza from your favorite local place. Now, what if that pizza shop becomes a massive, nationwide hit? Everybody wants a piece. Well, suddenly, the value of your one single slice could go through the roof. That's exactly how a stock's value works. So these slices of pizza, where do they come from? They don't just appear out of thin air. There's actually a whole process for how a stock is born. Let's get into their origin story. I'm sure you've seen this acronym in the news, IPO. It stands for Initial Public Offering. And it's basically the big debut party when a private company decides to sell its shares to people like you and me for the very first time. So here's how that whole journey plays out. You've got a successful private company that's doing great, but it wants to get even bigger. And for that, it needs a ton of cash. So what does it do? It decides to go to the public and sell off little slices of itself, stocks, for the first time ever. That first sale, that's the IPO. And just like that, the company is on the stock market. But wait a minute, not every IPO is a guaranteed win. You've got to look at both sides of the coin. For a company, going public is great for raising money and getting recognition. But for you, the investor, you need to watch out for some red flags. Things like way too much media hype, or maybe the company isn't even making a profit yet. And a big one, if the original owners are selling off a huge chunk of their shares, you got to ask yourself, if they're cashing out, why should I be buying in? Okay, so stocks get created through IPOs and then they're traded, but with thousands of companies out there, how on earth do we know how the market is doing on any given day? How do we keep score? That's where market indices come in. The easiest way to think of them is as the scoreboard for the entire stock market game. It doesn't track every single stock, that'd be impossible. Instead, it tracks a key group of important companies to give us a quick pulse check on the market's overall health. Here in India, there are three main scoreboards you'll hear about constantly. The Sensex tracks the 30 biggest companies on the Bombay Stock Exchange. The Nifty 50 tracks 50 of the largest on the National Stock Exchange. Because these two cover the biggest players across all sorts of industries, they're like a snapshot of the whole Indian economy. Then you've got the Bank Nifty, which, you guessed it, zooms in specifically on how the big banking stocks are doing. Now, companies also get sorted by their size. The fancy term for this is market capitalization, but all it really means is their total value. You've got your large caps, which are the huge, stable industry giants. Then there are mid caps, companies that are growing really fast. And finally, small caps. These are often younger companies with tons of potential for growth, but they usually come with higher risk too. So let's just put that all together real quick. The stock market is the place, the arena. In it, you buy stocks, which are just pieces of a company. Those stocks are born through an IPO, and we keep track of the whole game using indices like the Sensex and Nifty 50. See? It all fits together. Look, our goal here is not to give you hot stock tips or tell you what to invest in. It's to give you the real, solid foundation so you can start to think for yourself and make your own smart decisions. It's about building a financial mindset without any of the bluff or confusing jargon. So there you have it. You now know the basic language of the market. You get what a stock is, how an IPO works, and what it means when the Nifty goes up or down. So the real question isn't what is the stock market anymore. The question is, what are you going to do about it? What will your first informed conversation be about? Your journey starts right now.